No friends in the fitness industry for these companies. While Peloton faces headwinds for connected devices, plus an activist investor calling for an executive overhaul on-premise gyms and classes, they are trying to chart their own return to normalcy. And so here to discuss the state of fitness, we have David Long, who is the CEO of Orangetheory Fitness. David, great to have you here with us, and thanks so much for taking the time. Orangetheory, it had built a $1 billion unicorn status and sales, I should say, prior to the pandemic. So how has the pandemic reshaped the operations and even the correlating valuation, perhaps?
Yeah, thanks for having me on, Brad. Yeah, we reached 1.4 billion in 2019. Didn't know it was around the corner. And I think what's really been fortunate is we pivoted very quickly during the pandemic. We provided both complimentary workout of the day to our members around the world, as well as a live interactive experience. So our members, through temporary closures, could stay in the habit, which is so important, and stay in the habit of their regular exercise. As we come out on the other side of this and we look back at 2021, we added 500,000 new members to the Orangetheory brand worldwide. So even through Delta and through Omicron, we had incredible growth last year. And we really expect over the next few weeks to be back on that 10-year growth care that we've had.
David, the recent headlines around Peloton and the fact that the company is halting some production of its equipment products has raised, or sparked a lot of conversation about what the future of fitness, the gym looks like. They're one of the big beneficiaries during the pandemic, but what are you seeing? How's it evolved now that we're kind of in this space where, yes, the pandemic is still ongoing, people are still kind of learning to live with it?
Yeah, it's a great question. I mean, the at-home fitness had been around for decades before. It just obviously was in the limelight during the pandemic because that was really the only option. And I think this is really an and, not an or discussion. And as we learned from our members over the first decade and surveyed them every month throughout the pandemic, we learned that they just can't replace the in-studio experience, or the coaching, the accountability, the motivation, and that feeling of accomplishment of going to an on-premise studio. And so as we've come out of this, we really believe that that's still the cornerstone of most people's fitness regimen. And I think the advancement of digital platforms, and when we have our own, are really good ancillary and off days. But the core of really having somebody progress, understand how they're motivated and how they're getting results really still lives inside the studio.
I would love to know what the interest from potential franchisees looks like right now, incurring some of those costs to get off the ground and then continuing to try and woo members into that in-person experience with the precautions in place as of right now on a state-by-state basis.
Yeah, and so we're fortunate that our brand pre-pandemic had really more demand than supply for new franchise units to open, and it's the lion's share of existing franchisees that are growing. And so if you could imagine, that did slow during the pandemic, but we expect our growth throughout 2022 to pick up as far as new studio openings. And then when you look at the new member acquisition marketplace, it obviously varies by DMA. There are markets that have more restrictions. And we learned very quickly, back in 2020, how to provide the safest environment, how to pivot when restrictions change, and make sure that we're communicating really crisply, both to our existing members as well as folks that want to try us, so they know what to expect before they decide to walk through the doors and try Orangetheory for the first time.
Where are you right now compared to pre-pandemic levels? I mean, number one, if you're still behind, what do you think it's going to take to get there? And ultimately, in terms of recruitment, getting new customers through the door, is it about a better price point? Is it about safety? What are you hearing?
I think the right price point and making sure that the safety is there is really table stakes for us. It's really about building on the great experience that we already have and driving results and really showing incredible value for people that are only going to take 2 or 3 hours out of their week to make fitness a priority. And we have to deliver a great deal on those 2 or 3 hours. That's really been the cornerstone that's gotten us to this point. And when we look at recovery, some markets are very close to 100% recovery. Others are lagging because of longer term restrictions. But when we look in aggregate at our global business, we really expect to be back to 100% or plus recovery in 2022. And that's the way we're trending so far this year.